Okay boys, this was the fractal that we've been using, and you can see that so far so good. I did expect once we had tapped this high here that price come down to this zone here and then have one more push up to take that high before falling down there, because that's what it did before, right? In this case, from here we actually went down further. I do expect or am looking for price to come down into here. So this area would be a long area, and we'll discuss that. And if price starts to break this area here, then we're going to look for areas of liquidity next on when to play shorts, because price breaks here, it comes in like this, takes the liquidity and falls down, right? Falls lower. So we'll look at that now. I do have a high time frame trend line coming from the top, and this was just something that I drew from so I'll just explain this a bit. So with these trend lines, what this specific one does is we take the last distribution candle from the top before the move down, and we could have taken it from here. Still sort of works the same, the last distribution candle, the last up candle down, and we mark it off here. You can see there, so you can see the trend touches there, and here we break it, right? So then once we break up here, but we rejected and came back down, we move the trend line to the candle body, highest candle body there, right? So this is going to be our sort of downtrend line that we'll follow now. Right, on the lower time frames, this is the zone I had marked off. I'm not too sure if I shared this with the group, but this was simple here. We'll just delete that there, delete that there, delete that there, and I had marked it as an area of interest purely because this is what price did, right? So we had a move up here. So this was the actual point from this order block here that I expected price to go back up and then fall down, which it didn't. We just got this sort of sideways and down movement. So price came in here, and then we had sort of a 5-wave move down, and this was the inducement level here. This was the last up candle or swing high before price broke structure. So liquidity engineering, price comes back, takes the liquidity here, and then we fail to go higher, so we come back one more time and then we break, right? Once we break there, liquidity is now lying at the swing highs before the breakdown. So that was a breakdown there. There's your swing high here. Price broke down, failed to take the liquidity, came back, dipped more, and then we saw this happen here, right? So we took the liquidity there, and that so happened to be in an order block. So we took the last, the color doesn't matter, of the up candle. This would be the order block candle that I would use, since it's the one that took the liquidity on either side. So you can see that. And then on a 30-minute, I think it was a 30-minute, let's just take a look here, get rid of all of this. And we marked off a fair value gap. This is a 15-minute, I think it was on a 30-minute. Let's have a look. So there and there, right? So that was the point of interest for this move up, and you can see where price came into on the 15-minute and moved away. Now we're dealing with a smaller structure here. So we had this move up here that took liquidity here that we said it would, and what this created was the last swing low before the break of structure here and here. What did price do afterwards? It came back and it took the inducement level there. Now there is still a possibility that this is still one sort of bullish structure going on here, where we had a high we had a move up, and then we had a higher high. we had a move down, but this would have actually been the break of structure level to play. So if price actually went down there, then any retracement here would be a short. This here is internal range liquidity, right? So this is the reason why price came back to take this. Now what we're looking for is for price to either come back and take just above here, or even if it wanted, take some liquidity above here at the double top. So there'll be a lot of stops placed at this double top here. We can take this without breaking structure too much. In fact, without having a break of structure would be there, right? So that would be liquidity lying there, and we'll just put that in there, right? So that would be liquidity lying there. We'll look to see if price can take that and then move away. So right now we're rejecting. Chances are on a lower time frame that what's going to happen is you can see that this was the candle high that broke the structure here. You can see that price came back, took the liquidity above here, right? The simple move, it's called inducement. If I explained it to you before, we have a move up, for example. This is the inducement level here that led to the break of structure. Price comes down, takes it, and then moves away. Now there's a point where if price does this and fails to break down, does this, then there's a chance that it comes back up here to take the liquidity here, and then it falls down, right? You can see that many times, even in this case here. So price pulled back in here, failed to take the liquidity, pulled back in here, and then took all of this liquidity here and here and here and here. Right, it's a simple move, just looking for inducement and liquidity. So inducement has been done. We took out, let's just go forward here. We're in the order block, and you could refine this most likely to there, but that may be too tight. I just want to check something quickly. Yeah, that's a bit too tight. Maybe it still works out. We could, yeah, there. Okay, but for now we'll just leave it as it was. Fair value gap. Now this isn't bearish yet, so chances are maybe we are going to see some sort of A, B, C, B, and then price pushes up here just to take the double top here. So we're waiting to see if this can take more liquidity up here, because the first touch into a zone is not almost always the one to take. What would help us is if we started to break down here, then I would look for just to move back up into the fair value gap here, then we'd take a short. But if not, if we start to move further up, then we'll look to take some more liquidity here, because we're failing to break down here. So we could come back up here and move down, or we could come back, take the liquidity here, and then move down. So with that and the move down, we're looking, like I said, we're looking to come back down below this level into the green, so around 18,223. Now if we look here on a 1 hour, what happened here? Same three-wave story that I told you about. We had a move up, they moved down, and then a three-wave move up, with all of this being the internal range liquidity that I told you. This is just a bigger version of what we saw on the 5 minute here. So this was where liquidity was, and I'm going to point it out to you now. This was the level of inducement here, right? The last swing low before the move up that broke structure. And you can see here, price took it. But there's another move up, because with this internal range liquidity, we'd actually treat this as one, this as the retracement, and this as one leg up. We won't worry about it being three waves. We'd worry about a leg up, a swing low, and then another leg up. So the second opportunity inducement level would be here now, right? So we'd look for price to come down here, and take that liquidity. And remember that all of this is happening in a bearish monthly order block. So if we went back to the monthly charts, I had drawn in the blue levels here, which was the opening, and the low of this green monthly candle would serve as a bearish order block, just as the candles here would serve as a bearish order block on a monthly. That level there would be blue, and this level here, right? That's another bearish monthly order block. So if price came into there, we'd look for sells. So price is in the bearish monthly order block and ping-ponging from the swing low to the from the lows to the opening of the monthly candle. You can see here between the blue levels, right? I'm just going to darken that so you can see it a bit better. There. So we're ping-ponging between the two levels, and now we are looking for structure like this, right? So come down here, take this liquidity that we spoke about here. We may get a bounce here and then further down. So once we start to break here now, then we know that there's liquidity lying all above here, and there would be liquidity lying above here. So what would the next move be for price to do? It would be to come up here, and if we fail to take the liquidity here, we dip back into here to get more orders, and then we bang it back up here. And if we do that, then we're looking to fill the void or the gap and the top of this berry monthly order block level, and the fair value gap created in here on a 15-minute. You'd see it here. So that's the fair value gap there. We can mark it off. It would be there and there, right? So that's the level we'd be looking. And then let's just go back to our fractal and see how that works out. So like I said, we come down here, we move up here, we take some liquidity, we take more liquidity, and then we pump back up. But overall it would be this here, right? Failure to take all the liquidity above here would cause price to pull back down to take more orders, create more liquidity here. There's trend line, there's double bottom liquidity, and then we push up to where? Remember, we marked these two levels off here just now as the fair value gap here, and we marked it off as the top of the monthly bearish order block as well. So that would be a good place to take the next swing opportunity if we get there. It's also at the trend line resistance that we spoke about. So for now, all I want to see is whether we can break down from here, and the moves are going to be simple enough in if we can think about this, and this is how price is moving, right? Look at every move here that happened. Once we started to break a specific low, it creates, so that three-wave move that we spoke about is an engineering liquidity engineer, and I'll show you. So if this was a low that was broken here, this would be the small swing or pullback. Price comes back, takes the liquidity, and then moves away. So once we broke the low here again, this would be the liquidity engineering story. Price pulls back, takes that liquidity. Once we break the low here again, here, this would be the liquidity engineer. Price takes it there. Now when price does this, and then we have a change of character where it doesn't break the low, it's going to start hunting for liquidity higher. And where's higher? Higher is above the last high, which is here. Even here, this was a move here, takes it here. Can't go lower. Let's go look for more liquidity up here and take all of this here. Right, so simple enough. It's never a straight line down. We're going to look for three-wave moves like you can see here. Three waves to the upside, and then liquidity. So we saw it again. I explained that this was the move before the break of structure here. Price failed to take the liquidity there, pull back for more orders, took the liquidity there, then came back, took the liquidity here. Now we're looking for price to either take more liquidity or fail, and then we head down lower. So let's see what we get by tomorrow and this week. The only time I'm going to be really, well, I won't say bullish or look for price to move up is I had this level marked off as 19,575. I'm going to just put it really dark here, and another level here at 18,727. So this level is just a major support or resistance level where price has interacted for a very long time with BTC. You can see it here, 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 all over here, here, and all over here, right? So we're below it now. Until we can get above it here and start to hold above it, then we'll start to look for prices up here and to fill this fair value gap there. As long as we below it and in the bearish monthly order block, we are going to look for lower pricing, because this is not the end of the move here. This is the fractal that we took from way up here at 48k. We took it from here, then we most likely see even lower pricing than what I have plotted out, because this was the fractal that we took, right? And we just had a zoomed up or bigger version of it like that. Let's just have a look here. There. Can you see that? This comes all the way back to 6.5. So I'm not saying that it does happen. We'll extend our lines further down, and then you'll start to see the interaction of price with the with this distribution trend line here. And only once we can get a candle close above it and change structure, that's when we'll start to get bullish again. So let me just neaten up this trend line. I'll extend it a bit down further to where I had it. I think this should be okay there. Yeah, that should be okay. So that's what we're going to be looking for, and let's see what tomorrow brings. I know some of the guys took the short here at 19.8 based on what I said. It was about here, somewhere here, and I'm still holding. So let's wait for price to break down even further, and our ultimate goal is for it to come back into 19k or 20k level, and then break down. I'm sure we should have some volume profile. We're at the point of control, so it's a bit shitty here for this entire range here. I'd like to see it break down below the point of control, reject, and then go down lower. Because you can see what price has been doing here, breaking down. So we have a breakdown, and then we have a retest, then we have a breakdown, and then we have a retest of the level there. So price can break down and retest the level that it broke. Break down, retest the level that it broke, and just carry on. There's no major change of character, because if we had to draw the market structure or some sort of Elliott wave count, we had like a 1, 2, 3, 4, and then a 5 wave down here, and then we've got this WXY probably here, or a flat structure here, an X wave, and then a Y wave that comes back here. So until we start to hold above this level here, we are not interested in longing or buying, and the more we reject below this level, we're going to look for shorts. It's simple as that. Let's just double check something else here. If we can get a, well, this may be too much. I want to check something. Yeah. Okay, so that may work out, where we take the length of this leg here, and then this being the correction here, and then we project it down at 100% extension. We're looking for something there. Once we get that, we look for that, and then finally a breakdown there. Right, that's it. I'll upload this to YouTube. You guys can have a look at it, and from tomorrow we'll have a look at all the other altcoins and see what's going on where.